All right, let's talk about Bitcoin. You've definitely heard of it, right? You've probably seen the crazy price swings all over the news. But how does a bunch of computer code end up being worth thousands, even tens of thousands of dollars? And what is it really? Let's break it all down. I mean, seriously, could a computer code be worth more than actual physical gold? It sounds a little bit like science fiction, doesn't it? But that's the central question we're dealing with when we talk about Bitcoin. This idea of pure digital value is exactly what we're going to unpack today, and it's a concept that kind of challenges everything we thought we knew about money. So, to really get to the bottom of this, we're going to tackle 5 key areas. First, what even is digital money? Then we'll look under the hood at how crypto mining works. After that, we'll get into the pros and cons for anyone thinking of investing. We'll walk through how to actually buy and store it safely. And then we'll wrap up with a kind of long-term philosophy for how to think about Bitcoin. Okay, first things first. What are we actually talking about when we say Bitcoin or cryptocurrency? Let's get our terms straight so we're all on the same page. So Bitcoin, it is not a physical coin you can jingle in your pocket. Think of it more like a digital payment network. It lets you send value directly from one person to another, anywhere on the planet, almost instantly and often with super low fees. It was created way back in 2009 by this mysterious person or group called Satoshi Nakamoto. And here's the kicker. There will only ever be 21 million of them. That scarcity is literally baked into its code. Now, Bitcoin is just one kind of cryptocurrency. The word cryptocurrency is the bigger umbrella term. It basically refers to any digital money that uses cryptography. That's just fancy advanced encryption to keep everything secure. Every single transaction gets recorded on this public shared ledger called the blockchain. You can think of it like a giant global receipt book that everyone can see, but absolutely nobody can change after the fact. And you know, this right here gets to the absolute core of what makes Bitcoin so different. Our traditional money, it's centralized. It's controlled by banks and governments, and they can print more of it whenever they want, which can devalue it. Bitcoin, on the other hand, is totally decentralized. No single person, no company, no government is in charge. Its value comes from the people who use it and that hard-coded, unchangeable scarcity. So if there's no central bank, who's running the show? What keeps it all going? Well, that brings us right to our next section, crypto mining. This is the engine that powers the entire network. It's what creates new coins and, just as importantly, keeps everything secure. You know, back in the very early days, you could actually mine Bitcoin with a regular old home computer. But, oh man, an arms race started up really fast. First, people switched from their computer's main processor, the CPU, to more powerful graphics cards, GPUs. Then came even more specialized chips. Until today, the whole industry is dominated by these things called ASICs. These are computers built to do one thing and one thing only: mine Bitcoin as fast and efficiently as humanly possible. So what are these supercomputers actually doing? Well, it's basically a 3-step process. First, these miners gather up all the recent transactions into a block. Then they all compete using all that computing power to solve an incredibly difficult cryptographic puzzle. This is called proof of work because it proves they spent real energy to solve it. And then the very first miner to find the solution gets to add their block of transactions to the blockchain. And for all that work, they get rewarded with brand new Bitcoin. Okay, all of this crazy complexity has created a completely new kind of asset. And that brings up the big question for so many of us. Is it a good investment? So let's dive into what we're calling the investor's dilemma and really weigh the pros and cons. The whole debate around Bitcoin really boils down to this balance of some really powerful ideas. On the one hand, you've got these huge advantages: fast, cheap transactions that can go anywhere in the world, plus enhanced security. But on the other hand, you've got some very real risks. It's not regulated or insured like a bank account, the price is incredibly volatile, and the network can actually slow down when a lot of people are using it. And hey, when we say volatile, we mean it. The price can plummet by 20, 30, even 50% in just a matter of days. This is not your grandpa's stock market, okay? And that reality leads us to the absolute #1 rule for anyone even thinking about buying Bitcoin. Please do not invest more than you are truly 100% prepared to lose. Now, if you've weighed all those risks and you're still curious, the next logical step is to figure out how to actually buy it. And even more importantly, how to secure it. So let's get into the practical side of things. Okay, if you remember one thing from this entire explainer, please make it this phrase: not your keys, not your coins. It's the absolute mantra of the Bitcoin world. It means that if you don't personally control the private keys, which are basically the password to your Bitcoin, then you don't really own it. Simple as that. If you leave it on an exchange, it could be lost, hacked, or even seized. So, how do you hold your own keys? Well, with a wallet. A hot wallet is just an app on your phone or computer. It's connected to the internet, so it's convenient for small amounts. Think of it like the cash in your physical wallet. A cold wallet, on the other hand, is a physical hardware device, kind of like a special USB drive that's completely offline. This is like your own personal vault, and it's by far the most secure way to store your Bitcoin for the long haul. So here's a simple 4-step process for a beginner. 1. Open an account on a well-known regulated exchange. 2. Fund that account with a transfer from your bank. 3. Buy your Bitcoin, and here's a little pro tip. Use the Pro or Advanced version of the site because the fees are usually much, much lower. And 4, the most critical step of all, withdraw that Bitcoin off the exchange and into your own cold storage hardware wallet. All right, finally, let's zoom out a bit. Beyond all the tech stuff, a sort of philosophy has grown among some of Bitcoin's biggest believers. It's a whole framework for thinking about it long term, and some people even call it the 10 Commandments of Bitcoin. So, the first 5 commandments are all about mindset. People who follow this view argue you should start valuing your wealth in Bitcoin, not dollars. They say don't even try to time the market. Instead, just buy a small, fixed amount on a regular schedule that's called dollar cost averaging. The main idea here is to hold for the very, very long term, ignore all the daily price noise, and resist that urge to trade in and out. The next 5 rules, they're all about security and conviction. That principle we talked about, not your keys, not your coins, is number 1. This philosophy also includes super strict security habits, like never, ever sharing your backup phrase with anyone and being really discreet about how much you own. And finally, this way of thinking, which is often called Bitcoin maximalism, says to ignore all the thousands of other cryptocurrencies and just stay focused and optimistic about Bitcoin alone. So what's the ultimate takeaway from this whole philosophy? Well, its supporters argue that Bitcoin isn't just a new kind of currency. They see it as the ultimate store of value for our digital age. A kind of digital gold that, in their eyes, is actually better than the real thing, because it's more scarce, way easier to transport, and you can divide it into tiny little pieces. Look, whether you think Bitcoin is a speculative bubble that's going to pop, or you think it's the actual future of finance, one thing's for sure. Its technology is forcing a massive global conversation about what money even is and who gets to control it. The questions it's asking are only getting louder. So the only real question left is, are you ready for the answers?